Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. It is Sunday afternoon, so it's time for my weekly market prep where I go over the major U.S. stock markets to give you a better grasp and a better understanding of price action and market trends so that you can make better trading decisions and ultimately make more money. If you appreciate this content, please go drop a like down below. Click that little red subscribe button right next to it. And let's go ahead and jump into the charts. Okay, now we're starting off on a daily time frame looking at the DXY. You can see price action broke out of this wedge formation here and just absolutely fell off a cliff. Getting a little bit of a retracement past week, had a pretty solid week overall, ended about 1.5% up on the week. I do still see there being some more downside in the near future here. I think it's very likely that you see price action move back up to this 101.62 level, kind of in confluence with this 20-day moving average, and then I think you see price action get slapped back down to this lower zone down here, running from about 99 to $97, about a $2 range there. I think that you could see price action fall somewhere in that range. And then the other thing to be aware of is as we take our Fibonacci here, you see that is a 0.5 retracement acting in confluence with that 101.62 I just mentioned, and then that negative 2.5 extension puts you at 98.52, and that negative 6.1 is at 97. So kind of based on the technicals here, I think there's a very good chance you see some more downside to the DXY in the near future. So just keep an eye on that. Be aware of that. Be aware that this could change at any time. The markets have been known to surprise you from time to time. Jumping over to the NASDAQ. Not such a hot week for the NASDAQ. You can see peaked out kind of Tuesday, Wednesday, and then started moving back down. I think we're going to see a retest of this consolidation area from about 2-3 weeks ago when we did actually break out of it. Looks like it will be a good time for a 20-day moving average retest as well. So if we see it come back down to about 15,450, somewhere in that vicinity, I think that's a really, really strong buying opportunity. And be aware, we have this 50-day moving average coming up below us as well. I do think it's possible that you see price action, see a move like this back down to the bottom of the channel, maybe see a retest with that 50-day moving average somewhere in this area, and then price action ultimately continuing higher. Jumping over into the Russell 2000, Russell is looking very, very strong. Broke out at that 1923 level. Looks like we're just retracing back down. I actually want to take a fib measurement here. And yeah, once again, that's going to put us at a 50% retracement. Really, really strong buying opportunity at 1923. You've also got the 20-day moving average coming up below as well. So I think that this area right here, really, really strong buying opportunity. I would look for some longer term bullish trades should price action retrace back down here. If it falls back down below, which I really, really do not want to see, but if it does fall below that 1923 level, I would just kind of expect it to fall back to that 1825, which is the top of this consolidation channel. I think that's slightly unlikely based on the technicals as I'm seeing them. It looks like we've got a really, really strong trend going right now, but just something to be aware of. Taking a look at the Dow Jones, you can see the Dow had an absolutely phenomenal week. Finished up, let's see here, you have about 2% on the week. Really, really strong, in particular Tuesday the 18th, really, really strong trending day. You can see it's just kind of pushing up into this 410 level that I've previously mentioned goes back several months. The last time we tested this was over a year ago, April of 2022. So really strong push up into that. The Dow Jones is getting a little bit extended from the 200-day moving average, so I think it's entirely possible after we kind of test this level, which we already kind of have. We have a couple of wicks right here. You see a move back down to this 34,345 level, and at that point I'd like this to hold this area right here. You want to see that hold as we continue moving in an upwards direction. I think that would be a good confluence with the 50-day moving average at that point in time, kind of give the RSI a little bit of a chance to cool off as well. So that's what I'm looking for in the next kind of couple of weeks. I'd say the next maybe 1, 2, 3 weeks. I think that you will see this kind of retracement back down to that 34,345 level. Now, of course, I could be completely wrong. The markets could say, hey, let's prove that Liam has no idea what he's talking about. In which case, if it just goes straight through, I would kind of expect this to move back towards all-time highs at about 7,000. So that could happen. I don't think that's extremely likely. I think that my scenario is a lot more likely that you see this retracement down, kind of consolidation. You see this was resistance for a very long time. I like to see it turn into support, kind of gather some more buyers before we continue moving higher. Now, let's go ahead and take a look at my trade of the week. I'm going to stick with the theme because it's been working out really well. We're looking at large cap tech stocks. Obviously, these have been dominating the market all year. So what we're actually looking at today is ROKU. The ticker symbol is ROKU. Now, I already have kind of a few lines drawn out here. So we have this kind of green zone right here, which I will make just a little bit darker for you guys to see. Right about there. We have this green area. It was resistance in February, resistance again in the middle of June, and then we actually just broke through it, and we're seeing a really nice retracement back down, holding it, and hopefully turning it into support. The other thing is you'll notice this blue line. This is kind of a wave function. So you have this 1, 2, 3, 4, 5 wave. I'm planning to catch the 4, 2, 5 move. And the way that I found this 5 number right here is I just took a real easy fib retracement from the swing low to the swing high. You can see that we are likely to get a really nice 3.8 or even 0.5 retracement. I'm going to consider that 67 to kind of 70 area a really solid place to enter, and then we're going to ride it all the way up to that negative 618 or 90.24. I'm going to get rid of this real quick so you can kind of see better, because the 200-day moving average is a little bit screwy. That 618 extension, as we also look to the left, you can see seems to be a really solid level right in here. So I think that you've got really solid setup here. You've got a fairly decent risk to reward ratio, and so as we go ahead and hit our position here, we'll say we get in about, I don't know, $71 or so. Keep this right below the 20-day moving average, and then we're going to pull this all the way up to about $90. We got a 5.09 reward to risk ratio. We are looking to make $5 for every $1 of risk. Absolutely fantastic setup here. The only thing you kind of want to be aware of is we are going to have an earnings are going to be posted this Thursday, July 27th. So that could make or break this trade. It might send price action plummeting back down to somewhere around 50, or it could send it sky high and you might just miss the trade entirely. So keep an eye on that. If you're not comfortable trading earnings, please do not trade earnings. I don't generally trade earnings. I do like this technical setup, but earnings can absolutely impact a stock in wildly unforeseen ways. So please perform your own due diligence. Perform your own analysis. Put in a stop loss. Please don't do anything stupid with your money. And remember, this is not financial advice. So, with that being said, thank you guys so much for watching. I do appreciate each and every single one of you. Much love, much appreciation. Peace out, homies.